Bank of Georgia eyes acquisition of HSBC Malta in strategy to dominate smaller markets. Bank of Georgia, through its parent company Lion Finance Group, has submitted a proposal to acquire HSBC Malta, a move that reinforces its ambition to become a leader in the banking sector in smaller countries. The information was confirmed by the holding company's president to the Times of Malta newspaper, emphasizing that the transaction is part of a carefully designed global strategy to expand its presence in markets considered strategic. Lion Finance Group, listed on the London Stock Exchange, already has established operations in countries such as Armenia and Belarus. The latter, a market considered more controversial due to political and economic issues that require special attention to governance and compliance practices. The inclusion of Malta in this portfolio indicates the search for a balance between higher-risk markets and others with regulatory and economic stability. Malta, a member of the European Union and user of the euro, is known for its competitive financial environment, combined with strong connections to sectors such as tourism, maritime trade, and international services. Despite its small size, the country has a strategic banking network, serving as a hub for operations connecting Europe, North Africa, and the Middle East. It is precisely in this scenario that the Bank of Georgia sees growth potential. According to market analysts, operating in smaller countries can be advantageous for several reasons: fewer large competitors, greater proximity to the customer base, and the ability to implement technological innovations quickly. Furthermore, the acquisition of an already established institution, such as HSBC Malta, offers immediate access to a client base, operational infrastructure, and trusting relationships with regulatory bodies. However, the proposal raises important debates. Experts warn of the need to maintain the compliance standards required by the European Union and ensure that the change in control does not negatively affect the stability of the local banking system. There are also questions about how Lion Finance Group intends to harmonize its operations in markets with such diverse profiles, reconciling strategies for countries with high technological demand and more traditional markets. If approved by local and European regulators, the transaction could significantly strengthen the Bank of Georgia's international presence, diversify its revenue sources, and solidify the group's position as a leading player in smaller financial hubs that are highly connected to the global market. Want to learn more about the behind-the-scenes of major bank acquisitions and international expansion strategies? Keep following our articles and stay up to date with the developments shaping the global financial market.